Hello everybody, this is Matador from freetrainingvideos.com. It's 4:45 p.m. Eastern Standard Time, and it is still November 3rd, 2009, and Des has computer demons. He's having trouble with his computer, so I'm helping him out with a video here in the evening. No problem. So we have had a very interesting day and a pretty good sized run-up. If you look at the S&P 500 ETF, after this big gap down this morning, kind of even sold off pre-market, opened right in here at almost a perfect gap fill, rallied all the way higher, bumped its head on the 200 MA, declining if you again use the pre and post market data. If you don't use that, let me get rid of it real quick, then we are knocking on the door of the 100 MA all day long, declining. And if it looks messy, it's because I dropped a Fibonacci retracement in here, and all these lines on the way back up. So this 104.50 mark, beautiful ascending triangle, trying to break out of this, running right into the apex of the symmetrical triangle at the 105 mark and the 100 MA first. So again, knocking on the door of that, but being relatively bullish comparatively. We could have sold off dramatically today, and we didn't. Intraday, on an even smaller time frame, like a 3-minute chart, you can see that resolution even better. So these areas of resistance, right around here, we were doing our noon video, and we got a beautiful breakout as we saw the trends falling. Even the VIX was starting to drop at that time. Some good confirmation, albeit a little bit early to trade long into the face of this. Pulled back to support, and again this 104.80, 105 mark, those highs in there are nothing more than the retests of this 100 MA. So that's what we're looking at. If you kind of scrunch this chart up, you can see that the 105 mark again coincides beautifully with this huge sell-off over here, and that's what we're looking for to break. So 105, good resistance. Now we're just putting in nothing more than a few little higher swing lows in here. Let's check out the daily volume on this bullish engulfing candle of a high wave candle, not really taking out the highs and the low extremes of the day, but that's not too bad volume. So if I look at that, that's not anything to sneeze at. So I'll take that as a pretty good consolidation. Trying to put in a swing low in here. Almost an equal swing low, so it's X% more bearish than I would like if I was going to be bullish, and we are still below the 50 MA on the daily, so I'm watching that carefully. In here, we're still below that trend line if I keep it exactly like this, but it's anybody's guess right here. I'd like to see it come back up into this area of 107, chop around for a while, and break out of the 100 MA into the 110 mark, chop around there, and then break into the next logical place of resistance at the 120. So that could be some good long-term upside potential. Below that, the $100 mark, the century mark on the spiders, is something I'll be watching for as support. And that is still below this swing low at the 102 mark, but next stop, rising 100 MA and the $100 mark. So 2 centuries inner sort of marking that, guarding that support. Kind of cool. All right, everybody. Well, it's nice working with you so far this week. Hope you're having a great trading time, and I'll be talking to you tomorrow morning.